It's working now. I had some tech issues today, got locked out of my account on my streaming account because I forgot my password. I was out and about driving. Hey, welcome to another Wealth Coffee Chat. Team, don't have my usual setup today. I'm down at my potential new studio and doing a quick live stream with you guys today. So give us a shout out in the chat if you're there. I know it's a bit late this morning, but good to see a few of you guys jumping on now. A few of the regulars are there. Hey, good morning, Nicole. And a few of the others. James, how are you, mate? Good to see you guys jumping in. There's Alison. I don't have any music. I don't have my iPad. Don't have anything today, but I do have a green screen. I haven't set it up properly yet, but anyway, there you go. There's Graham. Good to see you, mate. I thought I'd just quickly touch base today, team. I won't do a too long a one, but I wanted to talk to you guys today on our Wealth Coffee Chat about, hey, check this out. I think I can show you the comments too in this. How's that? That's kind of cool, isn't it? A different version of what we're up to as we're going along. So, hey, morning to you guys. Hey, morning, Ben. How are you, mate? Good to see you. Graham's here on Facebook. Fabulous. Morning, Alison. We've got James Connolly as well and Nicole here as well. So, hey, fabulous to have all you guys on. I want to talk to you guys quickly about fixed interest rates and what that means when it comes to us and the marketplace right now, because I don't know if you guys have seen, put it in the chat if you've seen some of the lenders, some of the banks talking about increasing their fixed interest rates. Chuck it in the chat if you've seen that. Which of the main banks, tell me right now, which of the main banks have you seen putting in rises or increases in their fixed interest rates? So most of the majors now, most of the major banks have said, all right, well, we're increasing our fixed interest rate. And it's not a big deal, to be honest. I mean, still cheap, very inexpensive money, fixed money, a fixed interest rate over sort of a 2, 3 or 4, 5 year period. Often people will fix interest rates in. And what does that mean to us as property investors? The fixed interest rate, you know, going from maybe 2.5% to 3% fixing, which is still, let's face it, folks, cheap, inexpensive, so inexpensive money. What does that mean to you and me as property investors? Well, I don't know if you guys saw the RBA announcement yesterday. The RBA announcement yesterday saying that, you know, they were going to not increase the cash rate. So cash rate and interest rates are kind of linked sometimes. Not going to increase the cash rate if they can help it until 2024. And it certainly won't be in 2022, they said. Now, what does that mean? If the RBA puts up the cash rate, it means they think that the economy's healthy and inflation's under control, and then lenders will then put up their interest rates, which is the base, you know, underlying interest rate. So going around in a circle, what does that mean if lenders are putting up their fixed interest rates right now? What does that mean, folks? Tell me in the chat. What do you think it means if the finance lenders are putting their fixed interest rates up right now? What do you guys think that means to you and me as investors? Hey, morning, Brendan. Good to see you. I might take you for a little tour around the studio in a minute, but I don't know if I can actually connect myself up here. I'll see what I can do. Tell me if you know. Tell me if you know what it means. See if I can get that going in the confident in the market. Yeah, Pauline, certainly some confidence coming. What the banks are doing, they are predicting into the future that interest rates will rise. But more accurately, what the banks are doing when they're putting their fixed interest rates up is they are saying money that they buy from the market, the banks buy money from the market, and then they lend it out. They are saying in the future, expecting the RBA to increase it. Exactly, Graham. And so they're saying in the future, money is going to be more expensive for us to buy. So we're already pricing in certainly the fixed interest rates, because fixed, the lenders have to go off and buy it. If they're going to lend it to you for 5 years, they have to buy it fixed from someone else for 5 years. Okay, do you understand what I mean? Like the lenders, they have to pay a certain amount for the money that they go and buy or borrow. They're kind of a middleman between the actual owner of the money, often you, the deposit holder, or the government, or private lenders, and then they put the deal together and then they lend it to you. And what they're saying is in the middle here, they think that their cost of money is going to go up, especially fixed money, so they're already pricing it into the future, okay? So I thought I'd touch base on that today. I didn't have much scribbly things to write down, but yep, Graham, absolutely expecting the RBA to increase money into the future. Good question, Brendan. What's my thoughts on fixing our loans at the moment? Here's the sort of thing. If you want to fix your loan, then and you don't care if that value of that property goes up and you want to get more equity out, then that's fine. If you want to fix in your cost of money, that's fine, because you're just going to hold it and you're not going to do anything with that. But Brendan, if you fix in 100% of the loan and you want to unlock some equity, let's say next year your property goes up 50, 80, 100 grand and you want to buy another property and you want to unlock that equity, a fixed loan has to be now broken. You have to break that loan and get a new one. And what happens, Brendan, is you have to pay a penalty fee to do that. So when you sit down with a good finance strategist, obviously if you're in our mentoring program, Brendan, you should be connecting with your coach and one of your finance strategists. However, usually what we do, depending on what you're up to, you'd probably fix 80 to 90% of the loan. So you'd end up with 2 loans, not 4, 2. A fixed loan, 80%, and a variable loan, 20%. And that variable loan, 20%, you can actually make extra payments if you want to, but that portion you can increase without any penalty into the future. Hopefully that makes sense, Brendan. But that's a good question. I like the idea of fixing properties that you're not going to use, or the idea of fixing a portion if you want to lock in some of your expenses as you go forward, as the marketplace rolls forward and you're trying to manage your expenses along the way. So, mate, good question. Thanks for the question. That was a good one. Anyway, that's it, team. I'm just going to call it a quick chat today. The old tech issues got the best of me, but we'll be back tomorrow at the right time, 8:05, not 8:35, for the Wealth Coffee chat. Anyway, you guys be good. That's it. Over and done and dusted. Wealth Coffee chat done and dusted. You guys be good, safe and well wherever you are. Till I see you tomorrow. Take care. Bye for now. See you, Fang.